Welcome to TradeTheMBI.com. This is John. This report is for the 17th of January. And we continue to have the nice little solid upside move. The short-term bulls were able to keep that up within this broader general weakness, now flatlining from a long-term buyer standpoint. So they're pretty much holding the line with where things are, which has worked beautifully because that flat line is pretty much right across that 50% line. They're just, if they're building a position there, they're just going to wait until it keeps coming back to it. This case, we broke that 2,600 from the previous, at the start of the week, and got right up to the 61%. If we look at what the exact high was, 26, which is short of the 35 additional algo resistance that we would expect. And we saw the weakness build as the day moved on. It just got softer and softer, and then finally rolled over. Not that it's anything significant, it's just partial backfill in this. And you can generally see that both of the S&P and the NASDAQ here both giving the short-term buy fade just a little bit, but you don't have a short snake back yet. Could develop, particularly if we head towards that 50%. I would imagine that we will be within a full short snake with green under red, which would not be strength. And start of that weakness is continued euro slight fade. Of course, the nightmare of Brit exit may survive turbo, but that turmoil definitely doesn't make the Eurozone the greatest trading bloc in the world, as they claim, which can't seem to get their economies to move in any direction whatsoever. Certainly has kept gold in flight, and we could see that with cyan under red. Always a buy, not an issue. So if we look at what happened during the 5K, we started that pre-market with just barely a little bit of positive extreme. Wasn't anything significant, and then we ended up turning around cyan under red, which, as we like to say, is always a buy. That happened just at the 2613 algo. We talked about that before. 1250 from a daily standpoint was the number, and that created the push. Stalled out just briefly here at the 2618 one that we had from previous before, and then we started to get the clusters. And what you see with this is that spike of orange saying, hey, you've attracted some attention, but as we've talked about before with this rising red, now above the 7.5, the earliest you can start thinking about is, okay, a break of the 7.5, but you really need to have the steel do this cross. Now, this isn't really an issue. It's early from a getting in standpoint because you don't really have the full breakdown yet, but if you're near at the highs, you know, a slight deviation to the upside to there, not horrible. My expectation on this is just pretty much to fill this first positive extreme or something like that back to the ABM gold level at that particular point. What I'm looking for would be the lower shakeout, which happens right here on, as you can see, lower red DOC as it starts to move down from there. And the earliest point you can begin to take it is this rejection right here, where you already have green under red. Cyan is above zero, albeit not really producing any super excitement, and the steel moving back lower. In this case, you know that you're probably still going to need a few more bars to get some level of excitement. The only advantage to this is that you're up near the 100% value already, up at 23. So you're now having to wait for a potential breakdown bar, which does happen on the full DOC spread, which takes place just above the ABM yellow, right there at 22. So it's a way to capture an extra, 3 or 4 points, and then it makes the nice dip, breaks through the first algo, and then comes right down to the 2613 one, and provides the nice little support there. Though the dip below the red line means that I'm probably not too worried about this rally. Usually I'm expecting there's probably a 50% move back up. Where I would look to cover would be move back down to the algo again. And sure enough, it does that. And then that's where I'm watching for this. The P2, higher pivot, lower price. Yeah, and that produces a spark that takes us back up, where we get the exact same configuration. Oops. Accidentally moved that one. Let's take that off snap mode, because what I was trying to show with these is, again, You can just put your line across the red ones right there. You get a matching setup. A high breakout, clean short right there from the 22, and it's pretty fast on that decline. And then we start this slow escalation, and so this one becomes a little bit more interesting because we can take the high portion right here, or we can even take, and this is something we haven't talked about before, the under pivot right there if it breaks below that one again. So my first warning signs are going to be a turnaround from there. Now, when it broke below this, it could continue, but immediately turns around and it's like, ooh, I'm already getting a little bit of support going through there. And at that particular point, you raise to the next level right here, and you can see that slow building. And as you get there, you've got green over, and it moves above sign at that particular spot. And so this is one of those just slow, gradual. Then you have the bottom pivot right here, and it starts to move above that, and that leads to, and plus you're above the algo support range. And so it just is a slow grind up, and then again, we get the spike. Really lets you know, hey, there's been some major algo activity all of a sudden. Pay attention to this while we're at this high. It doesn't happen at, when we reach this high, nope, or here, or there. Boom, starts right here in the beginning breakout, and then full DOC spread. And again, similar situation, except for you're at matching high, actually have slightly higher highs, but what's going on here? Here we were above 7, now we're still below 0. And this is always problematic for bulls. Whenever I see these kind of tops below 0, I usually get pretty excited by them because I know that I'm probably going to get a second shot at it and certainly attack that baby, and boom, the cascade begins, and it just continued and accelerated. If we look at it from the new adjusted paint bar, similar effect, kind of clear, stays a lot more green throughout the range, but you can see later for, you have to break below the 76 for this one to even start with the magenta. That's because it's designed for the 50K, which is much broader signaling time frame. There'll be an adjustment for that. But likewise, does the exact same configuration. And now here, we end up with the little blue canvas. I think I put in the buy turnaround, yeah, right at that 207, which is where that is, and that allows for the ability to see if there's a continued softness, particularly on this kind of a breakdown. Sometimes you get a little bit of follow through right when that signal comes. You got to see if it's going to then produce. The best ones are the ones where you get the blue candle and you have the P2, and I'm developing that one where it actually shows the X's underneath as being the most prominent when you're down at these lower levels. In fact, I'm probably not even going to have it to where it's above the 50%. It'll only be moves from the 38 and below. I don't know that if it produced any down. Well, here you had it on this one right here where it produced the ones and had that turnaround right from there. We're not seeing that in this current configuration. Let's slide over to the current. We ended up with that first, but now you're making lower lows. So far the red is still higher. Presents obviously this line right here going across, and you have actually this peak right there, just a subtle one, but that's where you would look for it to kind of turn around and roll back around from. The critical thing will be if you're still down here and all of a sudden the red DOC is broken past this 13.5 and slightly higher, then it will actually attract some attention. But in the process, as it moves a little bit, I'll be able to take the low of this bar and continue to move across accordingly. In this particular case, probably satisfied with where it's at because it's below the 23% now from 207 because it just dropped again. So that's perfect. That makes them prove that they have to beat the 23% on that level. And this was an average down from the original entry, which added more in after taking the full on the other, but You know, it doesn't have to, that's my point, it doesn't have to be perfect, as long as you get those readings and you have this beautiful continuation. When that orange gets caught between the red and cyan DOC and moves across like that, you know you're just in for solid continuation throughout. So people would say, oh, but I've had fading of cyan. Well, sure, the shorts are going to ebb and flow, and that's the evidence by the pops. But this is letting you know that you're in a continuation mode because you haven't gotten the breakdown below. And none of this was a concern about a return going up because you have no orange dip at all with any of it. And you're not even making any rounding moves that you'd be able to draw a line from and get an alteration. Interesting enough, none of it was really oversold from an extreme standpoint, so it really can drop much further than this. So that's just something to be cognizant of, especially given what we saw from that daily set. If we look at the 50K real quick before we move on, you can see it had already broken down. Had the first start right here, up at 2618, and then they began to separate right there, also at 2618, as the steel and orange had met and it formed the actual short snake. You can see it develops right there, the cyan's right in the middle of it, and you're barely above zero, and then as soon as you get the breakdown, which starts right there at that ABM value, which was at 2615, another opportunity, and then certainly by the time it's moved across to here, which is also at 15 level, and then we have the breakdown. So healthy stuff from a positive extreme standpoint. Really nothing special. They've all been filled in before from all these. What you have is this dip below the red line right here. Those can take a little bit longer to fill, but somewhere around 2570, so still another 20 some points potential on the downside. Doesn't mean it's going to happen all at once, but we're already below the red line on the 50K. So all really good stuff. Been very pleased with how the algos really our indicators have responded to them beautifully, and it captures it quite nicely. Working on the range now between the 38 and 61% for signaling, so that just tightens it up more and more completely, so that we get very clean signals, and particularly when it comes to these short setups where red is below zero, this certainly will be signaling sooner than the ones where you're above zero. So it's just a matter of making those long lines of programming, but we're getting there, so it's all looking good. As always, though, I will put anything that's relevant on the Skype chat, but all this was pretty much straightforward that we've been talking about for, well, quite some time. As always, though, trade well, and we'll talk again later.